now.
All right, guys. Well, yeah. Again, thank you, David, for allowing me to come in and present and share some trading ideas, as well as something a little bit at the end. Appreciate it. And so I hope everybody had a good weekend. I'm going to go ahead and kill the camera because I live in a rural area, so my bandwidth, I have to fight for as much as I can. So I'm going to go ahead and kill the video for now, and I can always come back. But so yeah, hey, good morning, guys. Today, what I wanted to do was to show you how to time the market using Elliott Wave theory. Well, actually, it's a simpler Elliott Wave theory kind of hybrid approach to determine short-term exhaustion. And so you really don't need to know all the rules and all the ins and outs of Elliott Wave theory. I'll touch on a few patterns that I use. And in fact, I was watching Michael's presentation there. He's looking at Oxy and Tesla, and the pattern that I'm about to show you played out on his charts for the two entries that he identified. So I'll show you what that is. And that's pretty much, that's all I use for Elliott Wave theory. I'm not really an Elliott Wave theory guy, but this is part of Elliott Wave theory, and we'll get into it. We'll touch on measured moves and using Fibonacci retracements, and a couple of key moving averages. So the trading method I want to show you, again, doesn't require any sophisticated charting software or fancy proprietary indicators. I'm just leveraging price action along with a couple of carefully selected indicators to help identify market trend, locate trade setups, and then pinpoint exact entries and exits. And in a few minutes, I'll show you what that is, or in a few seconds, I should say. But first and foremost, guys, I must remind you, hold on, there we go. I had there we go. You guys should see the disclaimer, right? First and foremost, I must remind you, trading does carry significant risk, and all information in this webinar is provided for educational purposes only and is not an offer or a recommendation to trade futures, stocks, options, or Forex. All right, now that that's out of the way, a little bit about me. I've been involved in financial markets since 2006. Over all these years, I've made just about every mistake possible in my own trading, blown up a couple of accounts. I've learned what works and what doesn't. I've had several mentors, and I've picked up golden nuggets from each and every one. And what I've done is I've tweaked and made it my own. And that's what really, that's what we as traders need to do. I mean, you can kind of stick with a mentor that works with you or that makes sense to you, but there will be things you need to tweak up. And what I'd like to do today is just show you, one simple thing that's worked extremely well, stood the test of time. And if you focus on this one thing, then your trading will become more predictable and consistent. Okay. First and foremost, and this is where I believe a lot of, when I first started, this is one of the things I struggled with. People talk about top-down approach and all that, but to actually see somebody do it and talk about it and get an understanding of market context, that this has made the biggest difference in my trading. So before doing anything, step one, determine market context and trade direction. Okay. And what I use, and because I'm a day trader. Okay. So, I mean, I do some swing trades, but I'm mostly a day trader, and I will use a 30-minute chart. You can use a 60 or even a 15 if you want for that as an anchor chart or for that larger time frame trend. If you're a swing trader, for example, for my swing trading, when I do swing trade stocks and options, I'll use a daily chart and I'll use a 30-minute chart for my entries. But from day trading, I use a 30-minute chart and a 1-minute chart for my entries. So using the 8, 21, 50, and 200 moving averages, look at the last 30 days of the higher time frame for market context and identify the larger and intermediate time frame trend. And this is primarily, we're going to look at trade direction. So for example, just looking at this chart from July 13th through July 15th, right in here, your primary focus really should be on shorts. Okay, and then once the market took out and made new highs here, and all through here, really your primary focus should be on longs. Okay, now it doesn't mean you can't trade short, like right in here, possibly. You notice how the market's moving sideways. Whenever you see some type of retest and a failure, that's when you can start looking at possibly, trading it back. But you don't want to overstay your welcome. Okay, when you're trading against the larger time frame, don't overstay your welcome. So when the 8 is above the 21, is above the 50, focus on longs. Okay, if the 8 is below the 21, below the 50, fine. Look at trading short trades, trade shorts. What you want to do is line yourself up with that larger time frame context. Okay, it's going to make trading a whole lot less frustrating, and you're going to have higher reward to risk trades. Okay, so again, for the most part, focus on longs. If like in here, okay, you can focus on shorts in there. Notice that the 8 is below the 21, is below the 50. Same thing in here. You could possibly start looking at shorts in there, but don't overstay your welcome, because that larger time frame trend can kick in. Where it's going to kick in, look back to the left and look for a confluence of support in conjunction with the moving average. Notice when it pulled back here, it resumed trend, because it was a confluence with that key moving average and prior support here where buyers were previously active. And then more recently, right in here, you'd be focused on shorts, okay, and selling the market, okay. And then in here, you can actually, do some buying, all right. But then once we broke, and sometimes you will get stopped out. I mean, that's what stops are for. When the market transitions, sometimes the market will give you clues that it's happening. Other times you just get stopped out. It is what it is. That's why it's so important. And there was another mentor that I've worked with him in the past with one of the workshops we've done, and I love what he says. He says, your winners have to pay for your losers. So that's why you want favorable reward to risk trades. And then trading with market context on first, second, and third pullback are your favorable reward to risk trades. Beyond that, fourth, fifth pullback, the meat's off the bone. Doesn't mean it can't continue, but the odds are getting slimmer and slimmer that it'll continue. Okay. So step 2. All right. So again, step 1, determine market context and trade direction off the 30-minute chart. Okay. Step 2, identify good intraday trade location. Okay. You can use this off the 1-minute chart. I know this is very busy in here, but you don't have to have all of these on here. But what I've got is, there's my 30-minute chart. I always want to be aware of this. I've coached thousands of students at this point, and I'm like, well, show me your charts. And they just show me a 1, a 3, or 5. And I'm like, and I can see right off the bat why you're struggling. Where's your larger time frame? Well, I looked at it earlier. No, you need to have it up all the time. Okay, so especially if you're looking across different markets. So this way you're in tune with the bigger picture context. Okay, so for example, looking at the S&P, right? You have the larger time frame is down because we're below the 200. This is the 200 EMA. This is your 8, your 21, and your 50. Notice how they're stacked. The 8's above the 21, above the 50. So we can go ahead and look for longs in here. Okay. And one of the things I have on this chart is, it's simple. It's the prior day open, high, low, close, and the current day open, high, low. Okay. And then I've added some Fibonacci's in there from the low of the day to the high of the day. Okay. And one of the things I want to point out is, here's your 50% mark on the day. If you're going to fade extremes, and because we are going sideways, you can trade both directions. You want to make sure that you're pretty much selling up in here above that 23.6. And you want to make sure that you're buying, since you've got context, you're buying, below the 50, or after the market is balanced like it has here and broken out to the upside. The key locations, I mean, you can use the Fibonacci's as location. You can see here's your 76.4 on the day. Notice how we got a reaction. And this is just drawing your fibs from the low of the day to the high of the day. Okay. The key is 50%. If you buy down in here, you're going to have higher reward to risk trades. If you sell up in here, you're going to have better reward to risk trades. Okay. You want the edge in your favor as much as possible. So, and the location would be, for example, you got prior day high, prior day close, current day open, you got prior day open, or the Fibonacci levels. Okay. For example, if you shorted it up in here, this would be a great shorting opportunity in here. And I'll show you what to look for using that hybrid approach to Elliott Wave theory to take these trades. Okay. Same thing in this area too. It would have been a great long. And I'm not just pointing this out. There is a specific pattern that played out that got you in that trade, and it's in confluence with the prior day close and open. What level is the green line? This one down here. Oh, this one? Which one? Well, what price level is it? Top green? That's prior day high. That's prior day high. Okay. So on the, maybe zoom into your Zoom, like go full screen. Here's another example where the bigger picture context is in a downtrend. Okay. So we want to focus on shorts, right? Well, when the market had pulled back, you've actually got a short right in this area, and I'll get into it. Exactly why. But again, the key here is you're selling it above 50% of the day, or even above 76.4% of the day. Here's your current day high, your current day low. Okay. It's a little cluttered with the Fibonacci's on there, but I wanted to make a point with the 50%. And you can use those Fibonacci levels in addition to the prior day levels and current day level. Okay. But what's more important, I mean, even if you have your own zones, for example, some of you may have your own zones that you do. I'm going to show you something next that'll help you identify that short-term exhaustion. Okay. So what it does is it allows you to more or less prevent whipsaws. Okay. Let me get into it. Step 3, it uses a simpler Elliott Wave theory, more or less hybrid approach to determine short-term exhaustion. Okay. If you do a little research on Elliott Wave, you'll find that, there's specific unbreakable rules about impulse waves. It says, for example, if one rule is violated, this structure is not an impulse wave, yada, yada, yada. And apparently, I didn't know this. Apparently, until the other day, there's 5 types of Elliott Wave patterns. Okay. Not only are there impulse waves, diagonal patterns, zigzag patterns, flat patterns, triangle patterns. While having a good understanding of all this is helpful, you don't need to know all the ins and outs of Elliott Wave theory to be successful, guys. All I do and all you have to do is look for and focus on 3 patterns. Okay. And this is it. Okay. If you want to avoid we want to avoid whipsaws, or if you want to significantly reduce the number of whipsaws, and you want to time your entries better, okay, and you can even actually use this for target projection, especially the measured move up and down patterns. You can use those for target projection. Before buying the market, okay, look for these trades, look for these patterns, and I've narrowed it down because here's the thing: you've got to be able to duplicate it over and over and over and over and over again to a couple simple things. Otherwise, it's just too much. It's like a kid in Toys R Us. It's just too much. So what I've done is I've narrowed it down to when I'm looking to buy the market. Okay, I'm looking for a declining 1, 2, 3 pattern, a declining 1, 2 retest and failure pattern. Okay, both of these patterns played out on Michael's charts. I'll show you. I took a screenshot so I can show you. And they pulled back in confluence with his Fibonacci level. So I took a couple screenshots because I wanted to show you how it works. And it's there all the time. These patterns play out all the time. Reginald says, what time frames work best to identify these patterns? Any time frame. Honestly, any time frame. Okay, if you're swing trading, like I said, you can use the daily 30-minute or 15-minute. If you're day trading, you'll see these patterns play out on all time frames. Okay, it's just what works and what's most comfortable for you. But these patterns, the markets are fractal. These patterns play out on any time frame. Okay, I'll show you. I got plenty of examples. Before selling the market, look for rising 1, 2, 3 or rising 1, 2 retest failure pattern or rising measured move up pattern. Okay, so for example, the trend is up, right? And then you get this declining 1, 2, 3 pattern. Look for some type of resumption back to the upside. Okay. All right. Neil, why use the 76 and 23 instead of the more popular 62 and 38? You can use the 62 and 38. I liked 50%, which actually isn't even a Fibonacci number, but the 50% line, markets like 50% of a move. They tend to, they tend to pull back to that and resume or whatnot. And all it does is it break the 76 and 23. It breaks it down into quarters pretty much. So you can use those. If you prefer the 38 and 62, fine. But you saw it in here where, you can see. Now this one actually, it looks like it pulled back a little bit beyond 62. But notice at the 23, you got some price and around there, and eventually it broke down from there. It looks like this one actually held the 38. But now on this day, look at how it bounced off that 76. Right? Look at how it reacted around that 23 in here, right in here, and then back over in here between the 23 and prior day high. So that's why I'm saying the best trades are when you have a congruency between these Fibonacci numbers and like a prior day high, prior day close, current day open, that kind of thing. Those are going to be your highest odds. Like here, you have the 76 in confluence with the prior day low because they're right next to each other. So you would expect the market to pull all the way up to here, but it didn't. It became short-term exhausted. And when you look at this, what do you have here? 1, 2, 3. See that? That's why it's set up to short, and I'll go into it. So start looking for these patterns. Okay, let me just show you. I'm going to bring in. This is the screenshot. So just so you guys can see it before I continue. And I can't. There it is. Okay, so here's Tesla. Right, I took this off. This is what Michael's talking about. Here's Tesla, right? What do we have? Well, he's talking about buying in here. Look what you have here. You got 1, and then see the green bar, 2, green bar, 3, or you can even say it's a 1, 2 retest failure, right? Where you get 1, 2 retest failure. Okay, you guys see that pattern in there? You got to train your eyes to look for it. But once you start seeing it, it's like, oh my gosh, there it is. And it plays out over and over and over again. Here's Oxy. No, that's Tesla. This is Oxy. Look at this. He was saying right around here, right? What do you got? 1, 2, 3. Resumption. Okay. That's Elliott Wave. It's the same thing. Okay, without all the fancy and static rules around it. So here's an example. Again, before buying the market, look for a declining 1, 2, 3 or declining 1, 2 retest and failure or declining measured move down pattern. Here's the declining 1, 2, 3. Well, first of all, what are we focusing on? The 8 is above the 21, is above the 50. So we're going to focus on longs. The market breaks out, right? This high, well, maybe it's more like this high. One of these highs is this high right in there, okay? This breakout is the market breaking out of this balance. So you have a balance area right here, market breaks out, okay? That's this right here. That's the breakout. Right there's breakout. So we want to buy the pullback. All right. Draw your fib, extend your fibs from the low of the day, which is off the chart, up to the high of the day, up to this point. Okay. There's your 50% pullback. Now, how did I know you got support in here? How did I know not to put my resting limit order there to buy it on a pullback? Because I'm waiting for a 1, 2, 3, 1, 2 retest failure, or 1, measured move down pattern. So I'm letting the market tell me it's short-term exhausted. If I just put a limit in here, I'm forcing my opinion on the market. I'm not letting the market tell me where's short-term exhaustion. I want the market to tell me it's short-term exhausted. Because what happens is you put a limit order in there, you got your stop here, you get stopped out, and then you don't take the next trade, and then the market goes up, and you're just like, are you kidding me? Then it's like you're a kid at the train's left the station, and you just got stopped out, whipsaw. Okay, so do you guys see it? Look at this, off the high, here's 1, 2, 3, 50% pullback. Okay, whenever you have the 1, 2, 3 pattern, there's actually a couple different entries in here. You can look to take the trade right in here, or break back above that red bar, or on the 13 EMA, or buy and close back above the 13 EMA. This is more conservative. Okay, it's a little more conservative, buying on a close back above the EMA, the 13 EMA. Works really good on a 1-minute chart. If you're going to use like a 3 or 5 minute chart, then go with it like an 8 EMA. Okay, if you're going to use a 3 or 5, you can test it. Don't just take my word for it. Test it. You may like to use an 8, 10. You may like to use a 10 EMA for your entry trigger. So, but the 13 EMA is a little more conservative. I know another trader that works with us. He uses a 14 EMA. I never really thought about that, but he's been using it for years, and he uses it for a trigger. So, yeah, test it. But notice when you buy it in here, okay, place your stop just below where responsive buyers were previously active. You got buyers stepping in here, right? Comes up, pulls back. You buyers stepping in again here and here. What does that look like? It's an inverted head and shoulders pattern. It's an inverted head and shoulders pattern. If you were looking at a 30-second chart or a 15-second chart, that'd be an inverted head and shoulders pattern. And you easily got 1, 2, 3 reward to risk on that. So whether you bought 3 and scaled out on the way up, or you bought 1 and held on to it, or whatever. But again, the idea is that the market just broke out. This is that first pullback to 50% Fibonacci level. These are some of the best trades, off 50%. Okay. What's your favorite charts to look at for the waves? Honestly, any chart, because the markets are fractal. Okay. Here's the market's in a downtrend, right? So what do we want? You've got the 8 below, the 21 below the 50. We want to focus on shorts. This vertical line is this vertical line. Okay. Market is here. That's down here. We get a pullback. That's this pullback, right? So, but we want to focus on shorts. Yeah, but the market's moving up, right, on the shorter time frame. But we want to look to sell this and catch the resumption back down based off the intermediate and larger time frame. Does that make sense? You go with context. Okay. Don't try to buy this in here. I mean, you can, because there's kind of sideways, but for starting out, just trade the bigger picture trend. Okay. So now what do we have here? What are we looking for before we sell the market? Right. Look for a rising 1, 2, 3, 1, 2 retest failure or measured move up. Okay. Into trade location or resistance. Well, you've got trade location here and here and 50%. And remember what I was saying about shorting the market intraday? The highest odds are when it's above the 50% level, right? So we want to sell it above 50% because then the odds, I mean, if it comes back and retests the low, you know, you've got some good reward to risk there. So what's going on here is off this low, you got to move up, pull back, move up, pull back, move up. All right, there's our 1, 2, 3. Okay, now you might be thinking, well, what about, why isn't this 1, 2, 3? Why isn't that it? If you look at measured moves now, okay, and you look at the distance from the vertical distance from here to here to here, okay, you can take, let's put it on this low, and it's going to put you a little bit further up. Notice that this swing, you take both of these swings from here to here and from here to here and drop it right there off that low, and now so you guys still there? You guys still there? Okay, so we're still connected. Sorry, I thought I lost you. Something got disconnected. So, okay, good. Sorry about that. All right. So, yeah, if all the measured moves from here to here and from here to here, okay, and take the same distance, put it on that gives you an expectation that, hey, this will be my third push up somewhere in this area. So now you can, because the market, there is some predictability to it. It's not completely random. So that allows you to kind of get an idea of where this market's going to go. And so you have an expectation. So then when it gets there, you're ready to take action. Okay. Context is down. We're seeing 1, 2, 3 pattern. All right. And again, what are we doing? Are we going to put a limit there? No, we're going to wait for it to close back below the 13. Right there. There's our short. Did we take any heat? Yeah, that's normal to take some heat. Okay. But hardly any. I mean, we got a little bit of heat here, a little bit. And for the most, the market stayed below our average price, except for maybe 1, 2, 3 minutes. Okay. If that. We've got our stop just above where responsive sellers are previous. We got sellers in here, sellers in here. Okay, got our stop up in here, right? You easily got 1 to 1, 2 to 1, 3 to 1, 4 to 1, if not even 5 to 1 reward to risk on this. Okay, so if this is I don't know how many points that is. I'm not going to do the math, but if this is well, this is the S&P. What is that? It's around 39.42. It's about maybe 7 points, right? So if this is $350 risk, okay, if you're trading the micros, it's 35 with one contract, okay, plus or minus. If that's 350, I mean, look at the gains. This would be what, 700, okay, 1,050, and so forth. And all you have to do, it doesn't take long. This is 750. By 9:30, you're done. You made $700 that day. Okay. The idea, and if you're trading micros, it's $70. It doesn't matter. Okay. If you have a smaller account, definitely trading micros. That's money. Okay. Think about it. If you can consistently make $70 a month, a day, okay, $70 times 21 days, that's $1,500 a year. Okay, that's my mortgage payment, and then some. That's a mortgage payment and a car payment, and for most of you, that's probably a mortgage payment and maybe even a car payment. You multiply, you add 2 contracts. Okay, now you're up to $3,000 a month. Okay, so it doesn't take much. And again, if you have a small account, trade micros. Don't trade the bigger contract, the E-minis, until the volatility settles down. Hopefully it'll never settle down, and we'll, just trade micros until you're ready to increase to E-minis based on your account size. So yes, the stop is right there, right here. Place stop just above where responsive sellers were previously active. So again, if you shorted it in here, there's your stop. There's 1, 2, 3, 4 reward to risk, and so forth. Okay. We gotta watch my time. Is the 50% marker 50% of the previous day high low? No, the 50% is 50% of the current day. So I'll draw the fibs on the current day. And if you're familiar with volume profile, right, and fair value, if you were to do volume profile on this entire day, it would probably look something like this, right? With some, some stragglers in here, and then right around 50% maybe the POC. It was band of shift down in here where the point of control, where the majority of the volume is trading. The idea here with the Fibonacci's is you're kind of using them as fair value. So, and you're looking at this. So this is where, 50 to 70% of the volume, or this is where 50 to 70% of the price action is trading. The idea is that these are retail prices, above 76 and 4, and below 23 are wholesale prices. That makes sense. So you kind of break the entire day into wholesale and retail. Well, if you're selling, you want to sell retail, right? If you're buying, you want to buy wholesale. Okay, intraday wise. Context down. Pretty bearish. So are we going to buy? No, we're going to sell. Okay. We want to sell about 50%, which are retail prices. Okay. And you wait for that 1, 2, 3 pattern. There it is. Okay. Again, 1, 2, 3. It's somewhere up in here. And you got a little bit of move up, and then even if you consider this, notice if you waited for the close back below 13 and never took place, so you never traded it. So by waiting for a close back below the 13 EMA, the majority of the time, it's going to help you prevent the whipsaw. Other times, I mean, what it is, sometimes the market's ready to react and whatnot. But as long as you waited for a 1, 2, 3 pattern, 1, 2 retest failure on the way up, more often than not, you're in good shape. Okay. Where do you live? Where 1,500 covers both mortgage and car? I live in Florida, in a rural area, and that's pretty much what you have to. And I have we're humble, we're moderate. I mean, I don't, we have a boat, we have other toys and stuff, but yeah, it depends on where you live actually, but yeah, it's the cost of living is much. Florida is we've got the best governor. The cost of living is great. Yeah, it's much better down here than I used to live in Chicago, so paying crazy amount of taxes. If you can't see this screen, check just maybe go max Zoom or something like that. I'm still sharing, right? Am I not sharing? Okay. All right. When you say context, do you mean trend or are these distinctly different? Not only trend, but where are you at in the bigger picture? Like here, first and second, third pullback are the best. Here's 1, here's 2, here's 3. Yeah, you got a fourth one, but notice after that, the fifth pullback here, the meat's off the bone. So not only larger time frame and intermediate time frame trend, but normally a sustained move, you'll see 4 swings to the upside. This one you got 5, right? You got an extra one in here. You got 1, 2, 3. You can even say that that's kind of sideways, and then up again. So there's 1, 2, 3. There's your fourth or fifth, 4 or 5 pushes. It's not perfect. It's never going to be perfect, but you can expect 3 to 5 swings to the up. I mean, that's Elliott wave theory, right? 1, 2, 3, and then correction. So yeah. All right. Put wave PDF, please, on the screen. This one here. I will give David this PDF so you guys can access it for the recording. All right. So let me move on here, and then I'll save some questions at the end. So again, that's pretty much the strategy. I mean, keeping it simple. If you guys get anything out of today, okay, let it be this right here. Okay. If you guys get anything out of today, start looking for this. All right. I think I was about to show you guys. Yeah, I did. Did I show you this? I think I did. Where again, this is Mike. 1, 2, 3. Okay. Look at this here. Off the high. 1, 2, 3. And what did it do? It went up. So I mean, if you continue to draw fibs, this may be like a 20% from here to here. And this isn't even my chart. This is Michael's chart. But I just want to show you this pattern plays out all the time, over and over again. So if you get anything out of today, okay, if you get anything out of today, let it be this. All right. Okay. So 3 simple steps: determine market next, trade direction, identify good day trade location. Okay, you can use prior day, open, high, low, close, current day, open, high, low, and use the simpler wave theory hybrid approach to determine short-term exhaustion. Again, this, and you can look for this if you have your own idea for support or resistance. Start looking for this in price into those areas, and you'll see what I'm talking about. Okay. All right. So, all right. So I'll come back and get back. I'll come back and answer some more questions. But before I do that, I wanted to share something else with you. Okay. If you've liked what I've shared with you just now, we've got the perfect thing that will actually help you scale this and or any other trading strategy that you may be doing. Okay. I've been working with automated systems for a few years now, since the end of 2020, which it's not very actually that long. And what I've personally found with automated trading is that, optimizing a strategy, an automated strategy for different market environments can be a challenge. Getting real-time results to match back-tested results could be a challenge. Leaning on just one automated strategy can also be a challenge. Okay, all of these things are real challenges. And again, let me finish this, and I'll come back and answer some questions, okay, guys, about the strategy, because you may have some additional questions on this as well. So what we've got is this thing called Robot Lab. Okay, it allows you to take everything that you're already doing on your own, okay, or that you've learned here and some of the other presenters this morning, and that you will learn from the presenters this afternoon and into the rest of the week. It allows you to take everything that you have and what you're learning and that I've showed you and scale it. Okay. So what I'm offering you today is for you to come and learn how to do that. All right. Not selling anything. We just want you guys to come and check this out. Okay. Tomorrow, on Wednesday, September 7th at 4:15, I'd like to invite you to a free live masterclass. Okay. You'll learn a uniquely proven way that you can use fully automated day trading systems to go from 0 to full-time trading. Well, if you're already trading full-time, to add another stream of income. Okay, I'm doing this. I'll show you my personal live account shortly. I'll be there, but I'm not presenting. Okay, the presenter is the guy that is the architect behind Robot Lab. His name is Christian, and you're gonna absolutely love him. He's down to earth. Before I show you my automated strategies or bot portfolio, I want to give you a sneak peek of what you're going to see tomorrow. It's going to be about a 60-minute presentation with some time for Q&A at the end. Let me post a link in here if you guys are interested. And again, I'll get back to your questions too about what we talked about earlier. This is what Chris is going to talk about. Oh, and actually, you're going to get a free robot if you want one, just for coming. Okay. So, certain secret and what that means. So this way, you'll know from an automated trading system. And so this way you can develop trust in the system. So this way you continue trading for the long term. And he'll show you how you can slash risk. Risk is a huge issue, all right? For myself and other traders, drawdowns are a huge issue, especially if you've got a small account. He'll show you how to create a portfolio of bots that minimize drawdowns and maximizes profits, okay? In fact, in the next slide, I'm going to show you a portfolio that I created that's made up of 6 to 7 bots, okay, which minimizes drawdowns. And I'm currently running it each day in my own live account and one of my live accounts on PS. All right. I'm also going to discuss with you the #1 day trading system mistake that traders make, and he'll show you how to avoid it. Okay. This is something that I've had to learn the hard way. And finally, he'll show you a 0 to full-time income trading action plan. So you'll learn a step-by-step plan for scaling your portfolio of bots as you build your own account over time. And of course, at the end of the webinar, like I said, we'll save some time for Q&A. So we can answer all your questions. All right. Now, I don't want to bore you with all the details here. Christian will go over those in tomorrow's class. Now, about the portfolio I was talking about. Okay. Take a look at this equity curve. This is on the micros from May 6, 2019, when we have the micro started trading in May of 2019. Ninja Trader had to May 6, so I ran this over the entire period up until the end of. Take a look at these numbers, guys. Look at. I get excited about this because you could do this in a small account. Okay, look at your total net profit over this 3+ years. Okay, this is your max drawdown. Okay, what $10,000 account? That's only like 13%. Okay, look at your profit factor. It's almost 2 to 1, and your winning percentage is almost not quite 60%, but it's almost 60%. This is an automated strategy. Okay, you literally
hey Craig, sorry.
Yeah.
We were still seeing your slide. Oh, now it's changed to a strategy analyzer. Is that this?
Yeah.
Okay, now we're seeing.
Must have. Okay. All right, good deal. It must be my connection. I've even reset my modem this morning, so must be the weather. Okay, so yeah, but take a look at this total net profit, right? And look at the drawdown. Okay, this is over a 3-year period. Winning percentage, right? Factor. All right, look at this profit per month on average. Okay, I created this portfolio. We have different portfolios. I created this one because we've got clients that have smaller accounts, and they're like, hey, how can I take advantage of this with a smaller account? Well, this is it here. Notice the equity curve. It doesn't really correct. It just kind of goes sideways. So like Chris's portfolio is more volatile. He makes, he has a higher total net profit. Well, one, he's trading minis, but even then, but he'll also have more volatile drawdowns. This doesn't do that. Notice when it pulls back, it just kind of it goes sideways, right? It's stair steps. It goes up and then even sideways to up, but it goes sideways. This has been beginning year. This is the year right in this area, and look how much it's gone up. Yeah, we did go sideways for a while, where other equity curve pulled back. This one went sideways. So I'm really excited about this because it's working. Okay, I'm doing this in my own account. All right, look at this monthly histogram of the net profit. Okay, out of the 40 months since May 6th, we have 1, 2, 3 losing months. The biggest losing month is less than $500. trading one micro contract. Okay, and this 55K is on one micro contract. Okay, and I've done an integrity test, and I've tested, because I've been running it since March. I've tested real-time results against back test results, and there are some discrepancies, but it's insignificant. Okay, there are some discrepancies, but it's very minor. So for the most part, real-time results do match backtest results. Yes, this is futures. Yeah. Look at this. So you guys see the screen, right? With my live account. I started with 12.5 a few months back. And no, these results aren't live with real money. Okay, this is. Yes, I agree. These are backtested results. This is real money now. Now I'm talking real money, okay? I started with 12.5, and I wish I had taken a better screenshot. This, I can't remember what day this was. This was back in July. I can't remember what day it was. It was back in July. And again, these are micro contracts, okay? It ended up finishing up around, I think, $700 or $800 this day. I think it pulled back. I don't think we finished up this high that day. It pulled back a little bit. But what I found is the best thing to do is just let the bots run and don't interfere with them. Because, for example, I'll show you guys soon. The 26th, I think it was, that Friday. I'm getting an internet connection unstable again. I was out on the boat with my cousin, and before we left, it was up $700 or $800, and then it ended up, and I remoted in to my VPS from my mobile device, from my cell phone, and it ended up being a $1,600 day while I was literally on the boat. Okay, so these are automated strategies, and this is real money. Okay, the histogram is back tested results, but like I was saying, for the most part, I've done the integrity check. Real-time results match back test results. This was back in, I started the account with 12.5. In July, it was up to 13.8. Okay, and this was the other day. This was the 31st, I believe, and this is my VPS. It's already up to 15.3. Okay, so just to show you, it does work. Okay, this is the performance of account. Okay, I know it's not a whole lot of money. This is just from 7/15 to August 31st. Okay, but it's scalable. This is just one micro. So think about it. This is one E-mini trading on these 6 to 7 bots. That would be 28,000. Okay, plus or minus. This is one micro contract in live account. Profit factor is about almost 2 to 1. There's your drawdown. Fine, whatever. Drawdowns are expected. 79 trades, 53%. Okay, this is the key here. The key is you set it and you kind of forget it and just let it run throughout the day. You don't interfere. Okay, that's how you get that largest winning trade. When I first started, I would interfere, right? It would be up $600-700. I'm like, I'm going to take off profits. I did that probably a dozen times. Only like 2, 3, maybe 4 of those times I'm glad I did, but the other 8 to 9 times I wish I hadn't. And my largest winning and largest losing were right about the same, until I decided to just let the bots run and treat them as employees and let them do what they're supposed to do. And in doing that, my largest winning trade and my average winning trade exceeds my average losing trade, okay, by almost 2 to 1. It's 1.73. All right, but these automated strategies of 6 and 7 bots trading the micros, this is only over a 45-day period, but over the long period, it's about 1,300. Profit per month is 18, but that's only over a short period. This is going to be more accurate here over about 1,400. Okay, so again, this is a live account. I'm excited about this, guys, because it's like I finally found something. We have something that works. We've tested it and tested it and tested it, and I've built different portfolios, and I came up with this portfolio, and it works really well. It trades, 2 bots trade the E-mini S&P. Well, actually 3, if you go with the 7 bot portfolio, 3 trades the E-mini S&P, 2 trade the NASDAQ, and 2 trade gold. You can add crude oil bots and whatnot. And here's the thing, and Christian will go over this tomorrow. Let me post that link. And then I'll wrap this up so I can answer the questions. Christian will go over it in tomorrow's session. We've got a portfolio analyzer that allows you to run back tests on the bots, pull those in, and create your own portfolio. Okay. So again, this live masterclass is tomorrow, September 7th, 4:15. Okay. We got 250 seats available. You can probably squeeze some more in there. I don't know. This is marketing put this together. There's probably more than 250, but with only, I think we want to limit it. I don't know exactly what the number is, but they do want to limit it, because otherwise I've been in there and questions just come in like crazy. So feel free to join us tomorrow, and don't forget, you get a free robot just for coming and spending some time with us, so you can test it out. Again, guys, if you're on the fence, I'll be honest with you, I was skeptical about automated trading systems because I'm a discretionary trader, but when I started trading a few of these in another live account, I started to see results. Okay, positive results, and again, real-time results that match back test results. So now I've got a handful of bots that run every morning, okay, or I'll just turn them on once a week, and I usually restart my NinjaTrader on Monday mornings. I did it today. I did it this morning, and I'll just let it run for the entire week. Most of them trade during the U.S. equities RTH between 9:30 and 4. We do have some that trade overnight. I've only got one gold bot that trades overnight, so the others trade RTH, and all the bots close at 4 p.m. to avoid overnight margin. Okay, and they will close automatically at 4 p.m. Okay, if the profit target isn't hit first. All right. So not every day is a winner, but overall, as you can see, the portfolio is making money. Okay. Whoops. And let me start that slideshow. I went too far. There we go. You can look at it like this. If you want to create another stream of income that literally just takes a few minutes each day, if not a few minutes each week, okay, come join us. All right. I don't know what else to say. I did it again. I shared results, live account. It's a great way to create another stream of income for yourself, and with very little work. Okay. So with that said, I know I got to wrap this up here in a few minutes. Let me get to some questions. I'm going to start at the bottom and work my way up. Does the bot front run participants? No, it does not. No, it does not front run participants. Nope. Nope, it does not. Did you just start in July 15th? You tested for 45 days. This portfolio, yes. I mean, we've been running in my own live account. Yes, this portfolio. Prior to this, I was running a different portfolio, and it made money right out of the gate in March and April. And then the correction was larger than I wanted it to be. So then I was working with some other clients, and then we came up with this portfolio that, it stair steps. So instead of correcting on a pullback, it goes sideways it corrects by going sideways. Okay. Yes, the bots go long and short. Yes. Can you use your current broker? It depends on who your broker is. If your broker is with NinjaTrader or Interactive Brokers, yes, you can do that. I recommend trading your discretionary account, like in a separate account. Okay, and I would encourage you to run the bots. You'll learn more about this on Wednesday, but the idea here is I run these on a VPS, and my discretionary trading is for my desktop. Okay. Commissions, they're in there right there. It was like $100. and for these are micros. Okay, how many entry exits per day? There will be some days where it doesn't even trade, and there will be some days where just 2 or 3 bots, maybe 1 or 2 bots fire, and there will be some days where 3 or 4 bots fire. So, okay. However, rural Florida has lousy internet. Maybe you should move back to Chicago. Now, I'm hoping to get Starlink. Is it Starlink? Yeah, Elon Musk's. Okay. Yes, these are live money. Yep. Okay. Any other questions, guys? Because I think my time is just about up. Is there an indicator for 1, 2, 3? No, it's your eyes. I mean, it's a discretionary thing. Is your definition, Neil says, in your definition of market context trend, is your definition of market context the trend of the 30? Yes, and kind of where you're at, you know, is it the 3rd or 4th swing to the upside? That kind of thing. 176022, do you use any of the indicators to determine that the 23.6 level is the end of wave 1? No, it's the 1, 2, 3 pattern. I use that 1, 2, 3 pattern. I look for pullbacks with that 1, 2, 3 pattern, or 1 to retest failure to tell me, okay, because when the market moves down 1, 2, 3, now it's short-term exhausted. It's getting ready to go up, you know, back and resume trend. Okay. Wednesday at 4:15. Okay, there. If you click on the link, you post that link again in there. Everything's on that page. Thanks, David. I appreciate it. How long have you been using this bot? It's not one bot. It's a portfolio of 6 to 7 bots. Christian, he's running 40 plus bots. So you'll learn more about this on Wednesday. There's the link to get registered. Are you selling or your patterns, the bots using your patterns? I'm not selling anything. The patterns that I showed you are powerful. They work. Feel free to use those. If you want to learn more about Robot Lab, come join us on Wednesday. Okay. Is it on here tomorrow? No, it's separate. It's separate. All right. Any other questions, guys? If not, then David, thank you again. I appreciate the opportunity to come and share. And I guess I could put my email in there. If you guys have any other questions, there's my email address. Otherwise, we'll see you guys on Wednesday.